Okay, so just a really quick recap of the week beginning 28th of Feb. I've just done a full markup on it, so this is what all this is on the screen. 151.23% for the week. That's including losses as well. So basically, I just started on the 15-minute and 4-hour main POIs. Prices sort of just been respecting this supply chain. So that was basically my overall, theory for how the week was going to start. And of course, GU has been bearish for quite some time. So really sort of simple. It's just the same thing over and over again. We've entered the 15-minute supply zone, which is part of the supply chain. We've had the chuck on the 1 minute, which is really all you need for like a 15-minute POI, especially if it's a pro trend move. So especially if you are pro trend, then you only need the 1 minute chuck. So this is my first sort of level of interest really. So demand has obviously started to fail on the way down, don't really get much of a reaction from them. This demand zone here, so we make this demand zone, price pushes up, pushes down, this is the initial reaction into demand. We push up again, push back down, sweep the initial reaction, which is what I always sort of like to see. And then eventually demand does fail, so I'm happy to sort of just enter off the wick or the sweep of the initial reaction. So price takes a while, so it takes probably an hour or so to get back up into there, but it does react off a 15-minute POI, which after this 15-minute POI fails is likely just a CPB. Price does come up and respect this zone, which is really what we want to see. Risk off at 1 to 4 as standard, and then it's just really the same thing sort of over and over again. So we've got a demand zone that's been created here. This is the initial reaction, but I didn't actually trade this zone because this one at the top was just better. It swept more liquidity. So you got this mini demand zone. It's a valid demand zone because price pushes away quite aggressively from it. Instantly reverses, pushes up again, leaves a bit of liquidity there, so I was like, okay, that's probably going to get swept. Also this inside bar hasn't been swept there. Let me just mark that on. Oh, wrong one. So yeah, I was like, okay, this is probably going to get swept, and it does just by a tick, so not by much, but it does get swept. So that's why I covered this whole range. Could have entered just off that, but you would have got stopped out. Also, that was, it was going to be swept, so that's why I covered the whole range as well. Risk off at 1 to 4 again, so down there, and I won't look for another trade until I am risk free on the other entry, or my first entry at least. So again, this is the initial reaction, barely touches it, sweeps the initial reaction, price comes back, mitigates this zone but doesn't fail the demand, and then we've got a bit of sort of liquidity left above there, but as it's not an inside bar, it means it's not really a range on a lower time frame, so I wasn't too worried about that. And then price does come back up and mitigate this zone again. You could have used something a bit more like this. There's the initial reaction, this price pushes up, sweeps the initial reaction though, so you could have used really just his inside bar, but I just like this area a bit more. Price does respect it, and then once again, inside bar, range on a lower time frame. So price pushes up. This is the initial reaction, but this is sort of a deeper mitigation. Builds a bit of liquidity to the top, which does eventually get swept. So I gave this a bit of breathing room, like I do with most of the trades, but I gave this a bit of room to breathe. So we get tagged in about here. Price pushes down, doesn't quite get the risk off, pushes back up. At this point I thought this is probably a losing trade. It has just about by 0.2 of a pip kept us in. Spread might have taken you out on that one, but you've got these other positions, so it's not too much of a problem. but just, you know, for the purpose of back testing, I've purely just left this on, and then we do get the risk taken off. But like I said, I did think these equal highs would probably get swept. And then for my overall targets, it was basically just, so I think, yeah, it was this pretty much, if I can move it over, this is a part of a demand chain, so this is demand, it's an inside bar, that's part of the chain. This doesn't mitigate this, and there's liquidity underneath, so I was thinking, yeah, you know, if we get at least to here, all of this is just going to become internal range liquidity and most likely get taken. So realistic aim would be there. Whether we pull back up from there, I wasn't too sure. So because I've got these two really nice positions, I'd pull both of these for a 19R and basically a 13R, and then just let these two run pretty much the whole way down. And then once price does get back to sort of the 15-minute extreme, we get a little reaction, and then it actually deeper mitigates the 4-hour zone from quite a few weeks ago, and then I'll just drop down and do the price action from there. So I did get taken out for a break even on this one, but that's fine. So it's just the same thing over and over again. So we get the supply failure, we got the reaction, this has swept the reaction. Although this is an inside bar and doesn't get swept, it has swept here, which is the reaction from the supply, obviously. Price then breaks supply, comes back, mitigates that zone. I mean, it barely touches it, so if you had a limit order on there, you probably wouldn't have got in, and if you market execute, you might have got, say, filled somewhere up there, but you know, it is what it is. Again, risk off fairly quick, so then I'm happy to look for scaling. So there's two potential entries here, this one or this one. I sort of preferred this one, which is the one I went for. To be safe, I probably could have covered that just like that. I mean, 5 pip stop isn't, you know, it's not the end of the world. It's still quite good. But yeah, so we get the risk off. So I took a break even, obviously minus commission, but that's not much of an issue. I wouldn't have took this one. I just didn't like all of this price action. For me, this is just a massive build up of liquidity. It would have been a valid entry, but there's just quite a lot of liquidity being built under there. I thought it was likely to mitigate something slightly deeper, maybe this candle in here, if the frigging thing will move out of the way, and then continue up. Price does come back down, does actually mitigate this candle from a bit earlier. So if I'd have covered that, I would have stayed in that initial, or that scaling position. But this was the extreme. So when price came back here, I thought, okay, we're probably likely gonna, you know, sort of hit the extreme with the aggression. It came down. Didn't quite get there, but you know, it is what it is. And then there wasn't really too many opportunities that fit my plan. On the way up, there was a potential 2 positions here. I don't know if I would have taken them just because of how close we are to the supply. I mean, could have taken probably a nice 7R or something, but it just wasn't worth the risk, to be honest. So yeah, then I'll let price pretty much just run up to hit this supply chain here. So this just about mitigates this one, which mitigates this. Yeah, so there's a supply chain. It's hard to see all that stuff in the way, but like I said, I've literally just marked it all up. I didn't want to record it because the video would just be too long. It took me about an hour and a half to go through all the price as if I was sort of doing it live. So we get the 15-minute chalk in this supply zone, which is brilliant. It's what I want to see. We get a reaction to this demand zone, which gives us a flip zone to trade from. So I'll just break down the price action in this flip zone. So there wasn't anything really higher that I could have possibly gotten, apart from stuff that doesn't necessarily fit my plan, and you know, it's all about staying consistent. So yeah, so this was my entry. There's the flip zone. We do get a reaction there. We just mark that up. So there's the reaction. It doesn't sweep, so I was saying, okay, that's going to get swept, play from the extreme. It does come back to the extreme, and I did give it a bit of room to breathe, even though it does get stopped out. I probably could have given it 4 pips, something like that. 4 pips would have probably kept me in, but I didn't think about covering this high at the time. It's just one of them. It's a learning curve. But we get the risk off, so we do get a break even. So it's not that much of a big issue, especially with the other trades that we took early in the week. There's one loss here. It was valid, like I said, or I don't know if I said, but there's liquidity above these two equal highs here, so I wasn't really too sure on this one, but I thought, do you know what, it's worth the risk just to put that on. And then same thing here, we get a reaction to this demand zone. It does take a bit of liquidity from the left in these, and it sweeps this, and then it breaks the demand zone as well. But I was thinking, if price comes back up here and fails to take this, then we might be sort of bullish again, because technically this would be a weak high because it hasn't done its job and taken out this low. Price did mitigate it and then drop off, so that was a missed trade, but it's not really a big deal. And then this was the only other one that could have possibly got in on. I don't know if I would take this in a live market, just because I'm not too keen on the price action, but it is valid. So this is the flip zone. This is the initial reaction. We sweep the reaction. This would be the entry right there. So that would be where you get in. Probably give it 4 pips just to cover the highs a bit. But like I say, in a live market, I don't know if I would take that. Risk would be probably about here, at 1 to 4, but then we get that. Just mark it up so I can save it. Okay, so the risk is there even with 4 pips, so that's fine. And then that's the overall target. Price does eventually get there. I've not played it back, but obviously I'm only doing a replay, so I already know the price there. Hit there this morning, Friday morning. But yeah, that's the weekly recap. So plenty of opportunity. There wasn't anything really on Monday. Yeah, most of it was sort of Tuesday to Thursday. But yeah, that's pretty much it.